So this is a little bit of an experiment. Although Suresh chaired a session, GFM session at lunchtime, I saw some of it, very ably chaired, so it looked like it kind of worked. So what we're doing, if you like, is a little bit of a almost like speed dating thing with fund managers here. I just want people to say things that they've found interesting, that they've come across recently, and obviously, especially, some people are a lot more embedded in this than others, right? So we're going to have issues that will speak to different people and help move people in the right direction, which is what stuff I've been talking about for years that hasn't quite got going properly yet, but my dial shifter stuff. How do we get people to just go the right way a bit? We're not going to get everybody to the perfect place straight away. So what we want people to talk about here is different things that they will know will speak to different people on topics they find interesting. So any volunteers for kicking off? Brian, sorry, I'm going to add as well. Sorry, Brian is from Macquarie Asset Management, who have come on board also as a partner, and they're not on any of our logos, or on any of our promotional stuff. And unfortunately, I'm just going to say this in Brian's defence. It's not because Brian's not lovely or whatever, but we just haven't managed to get the agreement sorted out for logos and things, but they will be in due course. It will happen. So please, maybe Brian, if you'd like to kick off first. Would you like to stand, or are you happy sitting? Or
Happy sitting, happy standing.
Just go ahead where you are.
But maybe just a quick introduction. So my name is Brian Sparks. I'm the Managing Director for Equities within Macquarie Asset Management, and I'm really going to focus on the sustainable global listed infrastructure capability that we've been running. But for those that don't know Macquarie in the room, Macquarie is the world's largest infrastructure manager, and we're also one of the longest serving listed infrastructure managers in the world. We started our first strategy back in 2004. So when Julia asked me to think about some of your new ideas, what I get really, really excited about and thinking through what's been going on today is the confluence of sustainability and infrastructure. And there's two real reasons why that excites me so much. One, both myself, our team, our business genuinely believe that infrastructure can make a material difference to the environment and to society at large. But two, in doing so, it can also be an outstanding investment opportunity. And what I mean by that, if you think about what it is that drives outcomes or drives performance in infrastructure, the simplest way to think about it is the more investment we make today, the greater potential future return we have we have going forward, and that's by virtue of the concessionary nature or the guaranteed return profile of many of these assets. So when I think about where are some of the biggest opportunities, and the previous presentation also highlighted a little bit of this, we see a lot of interest in the biodiversity space, particularly around essential services and in particular water. So being an equity guy, I'm not going to stay at the high level. I'd like to go down and sort of talk a bit about where does that actually make a difference in the portfolio. We hold two water utilities in our infrastructure portfolio, in our sustainable portfolio, Severn Trent and United Utilities. I'm sure everybody in the room probably knows them in one way or another. So to give you a bit of context about why we like them, you think about these assets. These are essential services. They're monopolies in nature. You can't get water to your house any other way, and they service more than 12 million households and businesses across the UK, across those two companies alone. They work under a perpetual concession from the government, and they work under a model where every pound of investment generates a guaranteed return. Now, what's quite clear, and the last presentation highlighted it really, really clearly, is that what these businesses are providing is really going to be far more in demand in the future, no matter what we think. Climate change, hotter days, greater prevalence of storms are all going to drive demand, and these businesses are going to need to invest. It's going to be to create resilience. It's going to be to sustain demand. And I think that's a really important aspect of what we do. And if we think about a company like Severn Trent, a really great idea, a really great business, they're investing billions of pounds into this sustainability sector, into diversity, into biodiversity. 1.2 billion just in the 20 to 25 period, another 600 million pounds in the green recovery package, and another 400 million pounds in renewable energy. And a lot of people kind of ask me, okay, well, what does that actually mean? What can I tell my end client or my end investor that they're actually doing? Well, all of that capital is going into reducing the amount of water we use in totality. It's going to reduce the amount of water we take out of the system, and it's also going to reduce the amount of pollution that's likely to go into the system. So if we think about water wastage, so what are they doing in that space? They're putting in place 150,000 water meters across their client base in the UK. What about replacing lead pipes in your home? So some really, really interesting, ingenious technology that finds and replaces these lead pipes. But they're also focusing on the river systems. biodiversity programs to improve 5,000 hectares of land and 500 kilometres of waterways, getting bathing quality up and running. So huge investments that are going to drive sustainable growth. But it's not just about the sustainability aspect. We have to think about the investment aspect as well. And just really quickly cover off on that, these are great businesses, core infrastructure assets. They're run by incredible management teams. Liv Garfield at Severn Trent has done an outstanding job. And those in the market, one of the things we really like is a story that's not just supported by sustainability. Water utilities themselves are also supported by virtue of their really attractive inflationary characteristics. So they have not only inflation linkage, but inflation-linked dividend as well. And if I could just finish on valuation, we see really strong valuation support for water utilities, particularly those in the UK in a really well-regulated environment. But if we take some of the corporate activity that's going on in the sector at the moment, and we take some of those multiples that some of our private equity peers are paying, we see even more opportunity in the market, more valuation support than what we would have thought. So while these are just two individual positions in our overall portfolio, I think hopefully it gives you a good sense of why we think that confluence of sustainability and infrastructure leads to some really great opportunities.
Which is why I was asking for my phone. So I'm very glad that you brought that in on time. Clearly, I'm nothing like as professional as Suresh. So indeed. So look, I've got my phone now. I can do it. My watch is nothing like precise enough. So yeah, Suresh, please kick off with your story.
Yeah. Good afternoon, everyone. My name is Suresh Mistry. I'm head of sustainability at Alquity. And today I'd like to talk to you about change. But I'm going to do it through a couple of stories. Because it is about story time. If any of you remember play school, this is story time for play school. So it's that time of the day where I just need a drink or a story. And so what I'd like to do is just tell you a couple of stories that inspired the organization that I work for and inspires us today. And they're both from the emerging world. They're both stories because we're emerging market investors, and I think there's a lot we can learn from that part of the world. And the first story is actually a parable. It recounts the story of a Swedish anthropologist who's traveling through Africa. And she happens upon a village. And she walks into the village and she sees a group of children just playing, having some fun. So she walks over and being an anthropologist, she says, maybe I'll do a little test. She says, look, I've got a bag of sweets here. And I'll give the sweets to the first person who can run over to that tree and back the fastest. And so the kids, looking at this bag of sweets, so excited by this opportunity, all head off towards the tree. As they get to the tree, they round the tree and they're coming back. Something very unusual happens. All the children hold hands and run back together. The anthropologist was kind of puzzled by, why have you done that? So she asked the children, why have you done that? And one of the children replies, how can one of us be happy if the rest of us are sad? And that's a really important message because if I think about responsible investing, that's the essence of responsible investing. That sense of individual and collective responsibility for where we're heading as a planet. That value, and values are really important, I think, in this space, is called Ubuntu. It's the African word. It's a value we hold dear at Alquity, and it stands for I am because we are. And so what does that mean for us as an organization? One of the things we do is we believe this aspect that we are part of society as much as being investors in society. So we donate 10% of all our revenues go to projects which we call Transforming Lives projects. And many of you, have you seen these outside? Some of you may have them in your boxes. If you haven't, in your bags, grab one. This is a box of incense sticks. And I'll just tell you the story of this organization because it is just a wonderful story. So some of you will know, if you've ever been to a temple in the UK or in India, flowers are used in worship all the time. And in India, something like 800 million tons are used in worship. The problem is, once they are actually used in the ritual, they unfortunately get thrown into rivers because they're deemed holy, so they're not thrown in the bin, they're put into rivers. They pollute rivers. We've talked about river life, pesticides get into the water, or they clog up the waterways. So there was a guy called Alquity who lived on the banks of the Ganges in a place called Kanpur, And he devised a way of taking those flowers from the temples. He convinced the priest to take them, and he converted the petals into incense sticks, which are these, and the stems made fertilizer and sold them back to the farmers. Not only that, he employs women from the lowest castes, potentially women who otherwise would only get informal employment, in cleaning latrines, things like that, and gives them a formal job, gives them a job that they can be proud of and that they can actually help increase the wealth and the affluence within their family. And this is an example of just one of the projects, and I think it's a great story, and I know advisors clients love stories, and it's about how you communicate what you do from an investment perspective. But the reason I'm sharing those two stories and why I think it's about change is because when people ask me, Suresh, how do you pick a good ESG fund? And my usual response to them is before you choose the fund, choose the manager. Judge the values of the manager. Because ESG investing and impact investing, unlike traditional investing, presents a challenge that investors have to deal with. And that challenge is a moral dilemma rather than an objective dilemma. And you can't answer a moral dilemma with an army of analysts or a database or a commercial document. You answer it from your values, from what you hold dear. And that, when I talk about the manager, I'm talking about the whole organization. So I think those two stories are about what I think is really important, and something Sasha touched on this morning, which is this idea of entity-level change. If we're really going to achieve the goals we've set out, we need entity-level change. And I'll just finish. I'm nearly there. I've got a little quote. It's a Tolstoy quote that I absolutely love. And maybe you can take it home with you and think about it. Is everybody thinks of changing the world. Nobody thinks of changing themselves. Thanks.
Brilliant. Thank you, Suresh. Crikey, follow that, Charlotte.
I know.
You're on a very different subject here.
Well, I guess
maybe I should have put Suresh last. Thank you, but over to you, Charlotte, please.
Well, I guess I've drawn the short straw going last, but hopefully you guys still have some energy left to listen to me. But I guess we're kind of going full circle, because back to what Brian started with, I think biodiversity is a huge focus for us at Fidelity and across the industry. And I think it's still, while I spend, my day-to-day looking at biodiversity, you kind of forget that actually for most people it's quite a nascent topic still. And so I guess kind of going back to basics, what is biodiversity? Well, it's the variety of living organisms, so that's within species, between species, and in ecosystems. And biodiversity makes up one of the components of so-called natural capital. And natural capital essentially provides us with ecosystem services upon which we all depend. We've all eaten nice food today, and without the biodiversity around us, we wouldn't be able to enjoy the quality of life we do today. So I guess that's why we should care. But really, to put that into context, it's estimated that 50% of our annual global GDP is moderately or highly dependent on biodiversity. Now, in contrast, we've seen global wildlife populations fall by about 70% in the last 50 years. And we're seeing species extinction rates about 100 to 1,000 times their natural rate. So it's pretty staggering. And if this kind of continued biodiversity loss goes on unabated, frankly, we're not going to enjoy the quality of life we do today. And clearly, as investors, we're not going to be able to make the returns, give our clients the financial futures that we should, in our fiduciary duty calls upon us to do so. So now, one of the things about biodiversity, though, and addressing this biodiversity loss, is that unlike climate that can be measured by a nice single metric, GHG emissions, biodiversity is a bit more complex than that. It's very localized, so biodiversity loss in the Amazon is a very different, issue to biodiversity loss in, Sweden, for example. And also, it can't be measured using a single metric. So this is a real challenge for companies, investors, and other stakeholders in addressing biodiversity. So Fidelity have got involved in a pretty cool project. And so we've partnered with 3 other investors in collaboration with a kind of nature-based solutions provider called Green Praxis. And they are and essentially what the project is doing is it's using what's called bioacoustics technology to measure biodiversity impacts. And the aim of this at the end is that we can develop a new metric for understanding biodiversity impacts and dependencies. So what is bioacoustics technology then? So bioacoustic technology basically uses sound recordings combined with AI to measure biodiversity. And so many animals can actually be heard far more easily than they can be seen. So a large percentage of birds, frogs, insects, you name it, have very unique identifiable sounds. So what this bioacoustics technology does is it takes sound recordings in the field, and then using this AI, it can partial out the different species that can be heard. And so we just conducted the pilot study, taking recordings across different land uses, and really by comparing the different sounds that you're hearing in these different land uses, you can then start to understand more, what is the impact on biodiversity from different methods of farming, different land uses. And from that, we can then, be more informed about the practices, companies, they can be more informed about the biodiversity impacts they have. And you can combine this with other pretty cool emerging technologies. So eDNA is one, basically taking kind of swabs from, the land, water, which can then be run through, and you can basically track the different species. So there's a lot of exciting stuff going on, and really, as investors, we can use this to better understand, eventually, if we can create this metric, better understand our impacts and dependencies, but it's also a really useful lever for engagement when we speak to companies. So trying to inform companies about, how can they implement more sustainable practices. So that's, something that we're working on at the moment, I think super exciting, and, it's really important that as investors, we sort of, are at the kind of forefront of trying to move these topics forward and really start to sort of address them. So thank you very much, everyone.
Brilliant, thank you. So I wanted diverse panels, biodiversity, incense sticks and infrastructure. What can I say? I certainly can't see a particularly common thread through them. However, they were just brilliant. Thank you so much. I think we're probably best having conversations afterwards, unless there's any really burning questions now. Okay, I'm going to try and get us at least, I will finish us for 5:30, even if it means I have to not say anything. So if I can ask the next three people to come on the panel, please. Thank you very much. Really good, thank you.